Death, destruction, and misery. All aspects that come with war. For many people, this is a reality. As tensions in the global stage rise, such a desolate scenario is a growing concern for many. Aside from death, war brings on damage to infrastructure, a decline in the working population, inflation, shortages, and many more consequences, which we will get onto. Such consequences can harm an economy. However, this doesn't necessarily mean that wars always hinder economic growth. In fact, quite the opposite could also be true. Take the United States, for instance. During World War II, the country's GDP more than doubled. Obviously, GDP is not exactly a perfect measure, but such a drastic increase does raise some eyebrows. In this video, we'll look at the relevant economic consequences deriving from war and how they may impact the growth of an economy, including those who are directly involved in a certain war and those who aren't. On top of that, we'll go through various examples where certain economies grew and where some contracted during a war. Some of these examples might end up surprising you. But before we move on, let's understand what economic growth actually means. By most definitions, it's seen as an increase of a population's real income, with many definitions also stating that economic growth is simply an increase in the value of goods and services produced by a country in a given period of time. Why is this important? Well, there are many ways governments can somewhat artificially stimulate economic growth, especially through certain monetary policies which increase the supply of money in an economy, which usually leads to inflation among a few other effects. These factors can significantly distort the validity of some indicators, such as nominal GDP. So in a nutshell, what this all means is to take a few of these examples with a grain of salt. Starting off with the negative consequences of war. These can be quite evident. There are numerous, and we'll go through each relevant point. One glaring consequence is a decline in the working population. You see, in a war, a country needs soldiers. This means moving a portion of the labor force who had been previously producing something of value, such as food, into a war zone where nothing or little to nothing of value is produced. On top of that, wars usually lead to higher rates of emigration, as people want to escape not only being drafted, but also living in a bleak and dangerous circumstance, making this point more valid. These factors lead to shortages and, in turn, contribute to inflation, which constrains economic growth. You could take Ukraine as an example, which is one of the world's largest agricultural exporters. Due to the war, which has caused a significant portion of its workforce having to fight, its agricultural production had been limited, which in turn led to global food shortages and thus inflation on a global scale. However, it is worth noting that there are many more factors affecting this, other than a decline in the working population. Expanding on shortages, wars may also lead to sanctions and embargoes, which further aggravates shortages and triggers inflation, as we've seen with Russia. Another notable consequence is the damage to infrastructure. Rebuilding factories, buildings, roads, and the like can cost a country a substantial amount of resources. The extent of its cost, however, is highly dependent on the severity and location of the war. Take the Vietnamese War, for instance. The US had actively participated in the war, yet their infrastructure remained intact as the war took place in Vietnamese soil, as well as a few surrounding countries. On the other hand, Vietnam's infrastructure, as you could probably guess, suffered a major blow as it endured over 5 million tons of bombs, making it the most bombed country in history. Another negative consequence is uncertainty. With war, the demand for some types of goods and services decreases tremendously, unless demand is supported by some governmental decisions, such as the implementation of certain monetary policies, which do have long-term repercussions. Moreover, uncertainty is also aggravated as businesses are unsure if they'll be able to operate safely in the present and future. For instance, a certain region may be annexed. This can drive business activity and private investment out of a country, which inherently hinders economic growth. Aside from these consequences, war also entails a rise in defense spending, something that some countries are not able to fund themselves, which in turn typically raises the national debt of a country. Take the UK's debt to GDP indicator, for instance. During World War II, the ratio had increased quite dramatically, nearly doubling itself. This may mean that in the long term, austerity measures may have to be implemented to pay off these debts, meaning higher taxes and lower government spending, which once again limits economic growth. Now, regarding inflation as a consequence, if raised considerably, it may lead to more uncertainty, a loss of savings, and a loss of confidence in the financial system, which, needless to say, drives business out of a country. Lastly, another consequence relevant to all of these is the opportunity cost of war. All of those resources a country may have invested into rebuilding infrastructure, developing tanks, weapons, explosives, and the like can cost immensely. Instead, if those resources would have been invested into, say, education, healthcare, and infrastructure, a country's economy may have been able to grow at a considerably faster pace. Then again, it isn't all for nothing, as there are some benefits which we will discuss briefly. To wrap up this section so far, we have discussed several negative impacts a war may entail, which include a decline in the workforce, damage to infrastructure, uncertainty, increases in debt, and opportunity costs. These consequences can constrain an economy's growth to a considerable extent. Let's now move on to the potentially positive economic consequences that a war may bring on. One positive consequence is that during wars, technological advancements and innovation usually develop at unprecedented speeds. As a country yearns to gain advantage over its enemy, it's no surprise that this is the case. However, this is highly dependent on the number of countries involved in a certain war and its severity. During the World Wars, this was especially the case, where technology developed at unparalleled speeds. In fact, these technological advancements may have contributed to the rampant economic growth which occurred after World War II on a global scale. Another positive economic consequence is that wars can increase employment. This is due to the simple fact that governments will rely on workers to produce war supplies and to serve as soldiers. For instance, Germany's unemployment rate decreased to around 0% during World War II. It is worth mentioning, though, that many of these workers would have been shifted from producing consumer goods, such as food, into war-related goods, which serve little purpose other than waging war. Now, another important positive consequence, which is not exactly an ethical one, is a scenario in which a country is able to conquer new regions of a country and absorb their economic resources. This has been the case on several occasions throughout history. Simply, a country will have a bigger population, more means of production, and possibly more accessibility for trade. Moreover, a country may find themselves having more power in the global stage, which in turn can contribute to economic growth through having a say in global decisions. Although such a scenario may increase the economic growth of a country, it's not likely to increase the per capita wealth of its population, as resistance, cultural and language differences, as well as instability may ensue. Another positive consequence worth mentioning is related to the migration of people out of a country involved in a war. Perhaps because they want to avoid being drafted, or simply because they want to avert the negative effects a country may experience during a war. This tends to benefit those neighboring the country, and on top of that, those leaving the country involved in a war tend to be highly skilled people, as they have the resources to allow them to find transport out of the country. So far, we've seen the relevant positive and negative consequences of war. Now let's take a look at some examples of countries that have benefited with wars, and some that have suffered, economically speaking. Starting off with those who have benefited, one example is the United States. We have used the US as an example various times in this episode, but they are a prime example for this matter. You see, as a large part of Europe and Asia had been devastated during and after World War II, the US had remained virtually intact, having the capacity to supply much of the world with its powerful industry. Moreover, as its economy shifted from a peacetime economy to a wartime economy, it was able to create 17 million new civilian jobs, as well as increase its industrial productivity by 96%. These aspects contributed to the country more than doubling its GDP over the course of World War II, as previously mentioned. Then again, it's worth mentioning that the US had only joined the war at the end of 1941. Nevertheless, the positive aspects are the reason that during and after the war, it's often said that the US had greatly benefited from this war, among a few others. Another country who has benefited from a war is Georgia. This relatively small country neighboring Russia has been the place to go for many Russians seeking to flee, making it experience an unprecedented economic boom. In fact, over 112,000 Russians have migrated to this small country, which only consists of a population of 3.7 million. Such rapid growth in its population has contributed to a vigorous 10% growth in its GDP for the last year. On top of that, a large portion of those Russians that are fleeing are tech professionals with plenty of cash, which further drives Georgia's economy. However, there are a few drawbacks. For instance, inflation has risen considerably. As a matter of fact, rent in the country's capital has risen by 75% in the last year. Lastly, another example of a country who has benefited from a war could be the UK. During its colonial period and through several wars, The country, at one point, controlled around a quarter of the world's land, as well as 23% of the global population. Needless to say, it was able to attain a vast amount of resources and influence over the international stage, which has contributed to it having the largest economy during several centuries. For this section, we've used 3 examples, encompassing countries who were not actively fighting in a war, as well as those who were. Now, moving on to some examples of countries who have not benefited from war. Well, the list is rather long. However, there are some interesting examples. One of the best examples may be the Paraguayan War in the 19th century. In a nutshell, due to border and tariff disputes with some nearby countries, Paraguay had invaded Brazil among Argentina and Uruguay. After a few years of fighting and some fierce battles, Paraguay had suffered incomprehensible losses and a quarter of its land. In fact, prior to the war, the country had a population of just over 500,000. However, after the war, its population had fallen to about 221,000. Making matters worse, out of those 221,000, there were only 28,000 men. Not only did this constrain the future growth of its population, which, by the way, is essentially one of the most, if not the most, important contributors to economic growth, but it also meant a large portion of the working population had vanished. Although economic indicators were not recorded during these times, it's safe to guess that Paraguay's economy had suffered a massive collapse. Now, taking matters to a more modern example could be the war in Afghanistan, which has spanned 20 years. During this period, on top of over 100,000 casualties suffered by both sides, the war had cost the US over $2.3 trillion, which in turn netted the country virtually no benefit. However, if these trillions of dollars had been invested elsewhere, say healthcare or infrastructure, the country may have experienced a higher rate of economic growth. To wrap up this episode, wars are terrible. They're the cause of death, misery, and destruction. Economically speaking, there are several negative consequences such as a lower workforce, higher inflation, and the cost of rebuilding infrastructure. But there are also some positive ones, including technological advancements, higher rates of employment, and from the standpoint of an invading country, being able to absorb economic resources. In fact, there are many countries who have benefited from wars, but obviously also many who have not benefited. In this episode, we've looked at countries who've been actively participating in a war, but also those who've not, but still have been impacted in some way. We hope you enjoyed this episode, and if you believe we have missed out on something, or perhaps there was an incorrect point mentioned, please let us know in the comments section. Till next time.